How do you report over 15 trillion rupees in revenue over 5 years and then struggle to prove where almost all of it came from? That's the question at the center of one of the biggest corporate investigations in India right now. The company is Rajesh Exports, one of India's largest gold businesses, a firm that counts LIC among its biggest shareholders and has long been seen as a major player in India's export story. Now, Sebi has alleged that nearly 15.15 trillion rupees of revenue reported through the company's overseas subsidiaries may have been misrepresented. It began on March 11, 2024. A shareholder wrote to Sebi questioning large trade receivables sitting on Rajesh Exports' books for years. What are trade receivables then? Essentially, they are the amounts a company has billed to customers for goods or services that have been delivered but for which payment has not yet been received. At first, it looked like a standard accounting red flag, but the deeper Sebi dug, the bigger the questions became. An investigating authority was appointed in October 2024, a forensic audit by BDO India followed in December, and then, according to Sebi, key records were either unavailable, incomplete, or could not be independently verified. The investigation soon shifted to Rajesh Exports' overseas structure. The chain runs from Rajesh Exports in India to REL Singapore, then to Global Gold Refineries AG GGR in Switzerland, and finally to Valcambi SA, the Swiss gold refinery which the company describes as its main operating business. Between FY21 and FY25, Rajesh Exports reported consolidated revenue of about 15.45 trillion rupees. According to Sebi, roughly 15.18 trillion rupees of that came from subsidiaries and step-down subsidiaries. But here's where the regulator found a problem. Valcambi's audited standalone accounts showed annual revenues ranging from about 427 crore rupees to 743 crore rupees during the same period. But GGR and Rajesh Exports reported revenues running into several trillion rupees, creating a major discrepancy. Rajesh Exports says that is because Valcambi records only processing income, while gross gold transaction values are recognized higher up the chain. Sebi says that explanation is not backed by contemporaneous agreements or approvals. Then came another discrepancy. Rajesh Exports recorded sales of about 11,487 crore rupees and purchases of about 11,488 crore rupees with affluent shares and stocks between FY22 and FY24. However, Sebi says Affluence told investigators that Rajesh Exports was never its client. Instead, it said it dealt with promoter Rajesh Mehta in his personal capacity. Sebi has also alleged that 339 crore rupees was transferred from the company to Mehta, with 232 crore rupees later returned, but without the required board approvals and disclosures. It is important to note that these are Sebi's prima facie findings, not final conclusions. But what makes this case extraordinary is the scale. Rajesh Exports has disputed several allegations and says its accounting treatment was appropriate. The next phase will involve responses from the company, fresh forensic examination, verification of subsidiary records, and possible enforcement action. However, what started as a complaint about old receivables has now become a test of whether trillions of rupees in reported revenue can ultimately be verified. Follow Business Standard for more such stories.